Speeches from central bank leaders, especially the head of the US Federal Reserve, can have a major impact on markets. That Warren Buffett, through his company Berkshire Hathaway, bought 5 million shares. We have already surpassed a new all-time high, as we can see here. Hello and welcome back to the Xchief channel. I'm your host, and every week I provide you with a comprehensive analysis of the financial markets, focusing on key fundamentals and technical analysis to help you navigate the ever-changing landscape. This week, we'll dive into the major economic events that move the markets, including the FOMC meeting minutes, key PMI data, and the dramatic impact of corporate news on market sentiment. My name is Isa Martinez, trader and analyst here at Xchief, and stay tuned to discover what these events mean for your trading strategy. First, we will start with the economic calendar, and don't forget the hours you're going to see are based on GMT-5, which applies to Quito, Lima, and Bogota. On Wednesday at 1 p.m., we have the FOMC meeting minutes. This is a very important release for the US dollar because it gives us a detailed summary of the Federal Reserve's most recent meeting on interest rates. It can give us clues about their future decisions on monetary policy, so traders pay close attention to the wording to understand what the Fed might do next. On Thursday morning at 2:30 a.m., we have some key data from Europe. The German Flash Manufacturing and Services PMI. PMI stands for Purchasing Managers Index, and it's a survey that measures the health of the manufacturing and services sectors. A reading above 50 indicates expansion, while a reading below 50 indicates contraction. So these numbers give us a snapshot of how the German economy is doing. Later on Thursday at 7:30 a.m., we have US unemployment claims. This report measures the number of people who have filed for unemployment benefits for the first time. It's a leading indicator of the overall health of the US market. At 8:45 a.m., we have more US data with the Flash Manufacturing and Services PMI. These are the US versions of the same reports we saw earlier from Germany, giving us an early look at the health of both the American manufacturing and services sector. Finally, on Friday, the big event is the Jackson Hole Symposium, which will last for a second day. This is an annual meeting of central bankers and economists from around the world. Speeches from central bank leaders, especially the head of the US Federal Reserve, can have a major impact on markets, as they often hint at changes in monetary policy. Now let's head to the most important fundamentals of the last week, and we will start with the last Friday, as US stock futures showed mixed behavior, with the Dow Jones rising 0.6%, the S&P 500 with a slight increase of 0.1%, and the Nasdaq falling, reflecting a general caution in the market. Investors were digesting the fact that expectations for a rate cut by the Federal Reserve had moderated. All eyes were on two key events that day: the meeting between President Trump and Vladimir Putin, and the July retail sales report, which could provide clues about the impact on tariffs on consumer spending. Regarding company news, we saw significant movements. On one hand, UnitedHealth's shares soared after it was revealed that Warren Buffett, through his company Berkshire Hathaway, bought 5 million shares. This was a strong vote of confidence for the company. Intel also saw a rise in its shares amid rumors that the US government could take a stake in the company in an effort to support its domestic manufacturing capabilities. On the other hand, Applied Materials plummeted by 40% after the chip equipment manufacturer gave a weak forecast for the fourth quarter, citing slow demand in China and raising concerns about tariff-related risks. We will begin with the technical analysis of the most important assets we follow week after week, starting with the DXY, which symbolizes the strength of the dollar. The first thing we need to understand is that last week we had proposed a potential bullish movement from this low that had been generated, as we had a reaction in this fair value gap area that we have available here. Just to remind you, this scenario is probably now being invalidated, and if this is the case, we would reject the hypothesis of a recovery and accept the probability that a bearish movement for the dollar may continue. Therefore, any asset paired against the dollar could strengthen over the next few weeks. If this hypothesis holds, we could expect the next important low for the dollar to break to be in the zone of 97.632, 97.109, and 96.377. In the event that the bearish movement continues, the next thing we should analyze is that if there is any rebound or a significant upward reaction, reaction, we could be looking for certain stages related to the liquidity generated throughout this bearish movement. I'd like to highlight the 98.322 level, followed by 98.622, and finally a zone where a manipulation had occurred in the 99.320 zone. From there, we have a wide fair value gap zone that has not yet been filled. It's likely that in the event of a bullish move, it will attempt to fill this area, specifically talking about the 99.569, from which we could either maintain a strong bullish movement or in turn generate a larger drop. Now let's analyze the S&P 500, and as we can see, we have reached the high we had proposed in 6,475. Well, we can anticipate a significant drop soon. Given that we've been in a clear bullish trend, we must also consider that the volume is bullish. It's very likely that until we see objective evidence to the contrary, we should take advantage of any upward movement the S&P 500 offers. The next potential targets can be calculated using Fibonacci, and they are located at 6,803, assuming this bullish trend in the S&P 500 continues. On the other hand, we can begin to consider bearish targets in the zones where the current imbalances are on the 4-hour chart. These imbalances are also called fair value gaps. The first zone we'll mark is the 6,413, followed by another zone we will mark here at 6,347, where we can find a liquidity void or a gap that could be filled. Another gap we can see here, and it is found at 6,261, and a very important liquidity zone is located at 6,212. Despite outlining these bearish targets for the S&P 500, we must remember that the trend remains bullish and the volume continues to increase. Next up is the euro-dollar. Having already understood the dollar's bearish movement, we can expect the euro to continue strengthening. The next anticipated moves for the euro should be aimed at seeking upward targets. At first point we could establish, which we haven't yet as it just formed this past week, is at 1.17304, an important liquidity point. The next bullish zones we should dominate are 1.17889, and the final zone to look at 1.18299 to start defining new important highs for the euro. As for bearish targets, in case we see a bullish rebound from the dollar, we could expect to touch the zone of 1.16, followed by a liquidity zone we can find here at 1.15276. Next, we have a fair value gap with its 50% in 1.14870, and finally a liquidity zone we can see here at 1.13917. Remember that each of the zones and prices we leave in this video can serve as a guide. If these zones are reached, you could see rebounds, and therefore they can help us look for a reactionary move that's approved by our trading system. Now let's look at Bitcoin. We have already surpassed a new all-time high, as we can see here, defined at $124,533. All the bullish targets we proposed for last week were reached, and from here we need to understand the current scenario. We've had a sweep of position, as you can see in all these points where we can find liquidity zones, and the most interesting thing is that we are currently reacting in a fair value gap on the 4-hour chart, which would allow us to take a long position to see a significant recovery in Bitcoin. We are currently talking about a potential bullish movement that could be sustained. However, we need to understand that while this move is bullish, it doesn't necessarily mean we will go on to break new all-time highs. The bullish targets we would set based on this reaction and also these two manipulations I just mentioned could be to look for fair value gaps in this entire area. The first target is set here at the 50% of this fair value gap at $119,677, followed by the top of this imbalance, which is located here at $120,725. We could also expect a move to the 0.5 level of this entire bearish move we've experienced. On the other hand, if the manipulations that the price has had are not successful, and if this fair value gap is not useful, it is very likely that Bitcoin could continue to fall. Targets could be found at the last low of $117,208, and other clear liquidity zones are at $118,000 $115,800, and the last zone I would be looking for is $114,268. If more significant drops are sustained, we should be cautious because that would mean we'd need to confirm a move that could change Bitcoin's bullish structure to a bearish one. That's all for this week's analysis. I hope this information helps you in your trading journey, and don't forget to register with Xchief to start your trading journey with the best tools and support. Also, if you found this video helpful, please give it a like and subscribe to our channel for more weekly market analysis. See you next time.